Economic Ninja here. Hope you're doing well. You know who's doing really well right now, who is sleeping really well? That is Warren Buffett. Warren Buffett has been aggressively selling stocks. That is correct. Berkshire Hathaway is now sitting on the largest cash pile ever. Why? Because they know something that most people do not. And that is markets are going to turn and they are going to turn fast. As a matter of fact, they're already starting to turn. And they want to be able to be the big, great value investor that scoops up companies for pennies on the dollar as everything comes crashing down in 2024. This story is out of Zero Hedge. We're going to dive right in. It says here, Berkshire cash pile hits all-time high, 157 billion, as Buffett sells a record 38 billion in stocks in the past year. So many people in the first and second quarter of this year, stated, Ninja, you're wrong. Look at what Warren Buffett's doing. He's buying. That was actually not the case. He is selling, and now the quarterly reports that come out are proving this to be the absolute truth. It says, over the years, Warren Buffett has been optimistic and fluid with his ideals and political opinions. He describes himself as a Democrat, yet without batting an eyelid, will demand government bailouts for his portfolio of companies. But he has been steadfast about one thing. He refuses to spend money on stock purchases or corporate acquisitions unless there is significant value to be exploited, in which case one can probably conclude that the market is still woefully overvalued because earlier today, Buffett's conglomerate, Berkshire Hathaway, reported solid quarter 3 earnings, but more importantly, revealed a cash pile that has grown by 10 billion in the third quarter to a record 157.2 billion and has set to overtake Apple's own cash hoard of 162 billion as soon as this quarter. Cash deployment is definitely slowing, said Jim Shanahan, an analyst with Edward Jones. Ultimately, Berkshire's going to start feeling some pressure to put cash to work. I honestly do not believe that. I believe that Berkshire Hathaway understands where this market is heading. And with the Federal Reserve's stance on higher for longer rates and putting that maximum pressure, maximum pain on the economy, they know that there are about to be a lot of deals in corporate finance because companies are going to start hemorrhaging and start falling. Says here, perhaps, but not yet. In fact, in the third quarter, Berkshire was a net seller of stock for the fourth quarter, liquidating another 5.3 billion in shares and bringing the total sales over the past 12 months to a record 38.3 billion. Think about it. As there are people diving into markets, buying up stocks, you have one of the most successful investors of all time selling. As a matter of fact, hitting records of their selling to build up that cash hoard to take advantage of this downturn. It says, despite ramping up Berkshire's acquisition machine in recent years, the company has still struggled to find many of the big ticket deals that galvanized Buffett's renown, galvanized Buffett's renown, leaving him with more cash than he and his investing deputies could quickly deploy. Again, I want to remind you that Buffett went to cash and back in 2005, 2006, and started to buy up transportation stocks in 2007 and 2008 because that was the great deal right there. Right now, we're seeing the exact same thing. We're seeing trucking companies closing at an alarming pace. We are seeing the freight index plummet. At the same time, fuel is going up. This is the exact same scenario, but on a much bigger scale than we saw in 2007 and 2008. And that is exactly what Berkshire Hathaway is preparing for right now. After hanging back during the pandemic, he's since snapped up shares of Occidental Petroleum. Buffett has said he has no plans to acquire the company outright and struck $11.6 billion deal to buy, I don't even know how to pronounce the word, Allegheny. Buffett has also leaned heavily on share repurchases amid the death of appealing alternatives, saying the measures benefit shareholders. Separately, the conglomerate also reported operating earnings of 10.76 billion, which was a jump on the prior year as it benefited from the impact of elevated interest rates on the cash pile. and gains at its insurance businesses. So again, they're making profit because the gains on their cash hoard are going up because interest rates are going up as well. However, including investment and derivatives losses, Berkshire posted a loss for the quarter of almost 12.8 billion, well above last year's 2.8 billion dollar loss, which largely came from a decline in its big Apple stake. I think that between the Apple stake and the Bank of America stake, I think they are going to be very bummed out this next year. But that's not financial advice. Now, I will say this: Buffett was also pretty famous for selling off a majority of his bank shares in Berkshire Hathaway really close to prior to the banking collapse. So very interesting. It was almost like he knew something. Shares of the iPhone maker fell 11.7% during the quarter, but have rebounded 3% so far. So that's talking about his share in Apple. Strength in Berkshire's insurance unit, plus the inclusion of Pilot Flying J earnings, which Berkshire did not include in results last year, helped drive profitability. Berkshire said its insurance businesses posted a profit of 2.42 billion versus a loss in the prior year period when the insurance industry was being pummeled by catastrophes. It's interesting now, insurance companies, their share prices have tended to stabilize or go up a little bit. And that is because they are just simply pulling out of so many different sectors. So it's a great example of where bad news is actually good news. And then it goes on to talk about Geico and the things here. But it says here Berkshire posted stronger operating earnings despite Buffett cautioning at its annual meeting in Omaha in May that earnings at the majority of its operating units could fall this year as an incredible period for the US economy draws to the end. Now think about that. That is what he said at his May meeting. Again, I'm going to read that to you. He was cautioning about all of its annual numbers, all of its companies that it owns, starting to issue poor or scary forward guidance. And his direct quote was it was an incredible period for the US economy, for the US economy draws to the end. People are not realizing the warnings that are coming out of people's mouths, like Warren Buffett saying the US economy it draws to the end. It's coming to the end. We are seeing the end of this American hegemony. It absolutely blows my mind. It says, still, the Fed's rapid rate hikes help the firm reap huge returns from its cash, its stockpiles, mostly in short-dated U.S. Treasuries. That said, those higher rates also created headaches for some of Berkshire's industrial businesses. The conglomerate's building products business saw revenue slip 11% due to the run-up in mortgage rates. They go on to say, and this is from Berkshire, the effects of significant increases in home mortgage interest rates in the US over the past year has slowed demand for our home building businesses and our other building products businesses. Berkshire said this in a report detailing results. They said, we continue to anticipate certain of our businesses will experience weakening demand and declines in revenues and earnings into 2024. So they were telling you right there that they are expecting things to continue to slip. It says, as usual, Berkshire Hathaway asked investors to look past the quarterly fluctuations in Berkshire's equity portfolio. The amount of investment gains or losses in any given quarter is usually meaningless and delivers figures for net earnings or losses per share that can be extremely misleading to investors who have little or no knowledge of accounting rules, the company said in a statement. Well, this is what I want you to realize. They're telling you right there through their messages in their annual statements, their quarterly statements, do not pay attention to the minutia, but they're also saying prepare for bad news, prepare for the companies, the majority of our companies, if not all of them, to have really bad annual results, and especially going into 2024, that they expect things to get worse. At the same time, they are hoarding cash and selling stocks at record levels. They're selling stocks at record levels, and their cash hoard is now at record levels. What does that tell you? That tells you that Warren Buffett, Charlie Munger, and Berkshire Hathaway knows a big crash is on the horizon, and they are preparing for it. The only question is, are you? Hope you got something out of this. The Economic Ninja is out.